Good day everyone, welcome back. Before we get into today's presentation, just a small reminder that I do not teach ICT's concepts. So if you want, just pause and read this disclaimer. Other than that, let's move on. So everyone, this is part 2 of our balance price range notes from FOREX presentation. I suggest if you haven't yet, watching the first video in the series, because I will be referring to a lot of information discussed in that review. And just to remind everyone, when we make reference to a balanced price range, what we are suggesting is that there is a definitive boundary which we don't want to see breached. This boundary refers to the area encompassed by the bodies of two opposing inefficiencies. And this definition and understanding of what a balanced price range is very salient to our future discussions on narrative and bias studies, and why our expectations on what price should do relative to a balanced price range is at all relevant when reading price action. So we have identified two functions so far. The first allows for the market to reprice no more than 50% or equilibrium of the range established by a balanced price range, as long as candles continue to close below or above the equilibrium. That balanced price range is effective at resisting price. The second function of a balanced price range is to resist further repricing inside its range. So rather than a return to equilibrium, the market displaces quickly away from the consolidation to target real liquidity below or above the market. We looked at examples of the first function in our first discussion of balanced price ranges. So today we'll look at the example of the first function, providing market commentary for price action on the Euro USD for the 26th and 27th of July. If you're wondering why I chose to do the second function and then the first function, it was simply because at the time when I was putting together the material, that's what the market was presenting as examples for me. So that's exactly why we're doing that. Anyway, moving on. So I want to draw your attention primarily to the New York AM session, which in FOREX extends from 8:20 until 11 a.m. So this is also known as the New York AM kill zone. In this example, we note evidence of institutional sponsorship as market structure diverts across the euro and the dollar when we're comparing the lows that formed during that session. SMT divergence of this nature is a qualifying factor validating PDRA formations. The balanced price range is just one such formation that leads well in its success as a tradable PDRA when preceded by SMT divergence of this sort. Always try and qualify a balanced price range by comparing the highs and lows between the dollar and the euro. This will increase your accuracy when trading them, or comparing or incorporating them in your narrative studies. This would be a good time to note that the balanced price range is a very effective measure against which you can test your bias. What I mean is, because we have certain expectations on how price should react when trading at a balanced price range, it becomes helpful to constantly compare those expectations against what price is actually doing. When the balanced price range are indeed valid, we should expect that the equilibrium remain respected. And if we continue to note this behavior, we can begin to build a narrative and therefore a case for a certain bias. Note how the equilibrium is being respected. Candles might be seen to wick through, but that level continues to wick through that level, but the candles continue to close higher, or just at the equilibrium in this case. So again, look here. Our price is respective of the equilibrium between this imbalance is high and this imbalance is low. So you'll note how price is seen to respect the equilibrium of this range. Okay, take note of this orange shaded area. This is an inverted fair value gap on the 2 minutes. I noted really early on during the day's trading, and we'll see later on how that becomes really quite relevant as the evening's trading progresses. So in this slide, we get to see a closer look of that inverted 2-minute fair value gap. And we'll see just how effective it was at supporting price. Now, it makes sense in this context to note an inversion fair value gap of this nature, because our narrative at this point has suggested bullishness, and therefore we should anticipate discount PD raise to support price. It is not hindsight or conjecture when we expect something to happen, when our narrative studies are supported by our understanding of price action. We can make reference to this type of PD raise and actually use them as ways to get into the market. Later on in the day's trading, we have a return to fair value continuation setup, also known as a silver bullet, which manifests in forms here between 3 and 4 a.m. So nothing too out of the ordinary here. Moving on. Again, later in the same day, this is near London lunch, we are able to see the formation of another balanced price range, okay? And we note the initial respect of the equilibrium. And I actually traded this retest, so I'll show you that execution. So what you'll see here, this is an MT5 platform I'm using to trade Forex. So I use the 8-cap broker supplied by my fund at FX. And so I'm currently affiliated with this company, and they have given me an affiliation code. If you don't know who they are, I'll leave a link in the description for you to check them out. But in my opinion, they are by far the most lenient trading company out there, which is probably the reason why I trade with them. But anyway, they have pioneered many of the now more common challenge types, I think. They have a really nice community presence, especially on Twitter, where they regularly offer really good discounts, sometimes up to 50% on some of the smaller accounts, which is really crazy. So not only are you getting regular access to discounted challenges, but the way they have designed these challenges, the profit targets and the drawdown rules are some of the most lenient out there at the moment. So in this way, I think they provide a fair playing field for all traders. So even if you are a more seasoned trader looking to diversify your portfolio, or a beginner wanting to take your first steps with prop firm trading, I think my fund at FX offers unparalleled chance to prove your skill and be rewarded for your talents. I highly encourage you to check out their programs, and if you want to support my channel, feel free to use my referral code, which is DeltaZone with a capital D and a capital Z, but I'll leave that in the description. So this is an overview of the day's trading, and the main points I want to draw your attention to are the retest of that balanced price range at equilibrium, and the use of the inverted fair value gap with an expectation that it can be used as a mechanism by which to enter the market, given the nature of our narrative studies up until this point. Then we had the silver bullet setup, return to fair value, continuation trade between 3 and 4 a.m. We had a retracement during London's lunch period, 5 to 7 a.m. There was a small balanced price range here, which traded back into another inversion fair value gap. This was Wednesday, and it was FOMC. So we'll just note here, I said here that institutional market structure reflects accumulation in the euro, and we have to reference the dollar for intermarket confluences. So what I mean is, if you have a look on the dollar at the same time, you'll see that it trades back into the equilibrium, tests that new day open gap here, and you'll see that we have relative equal highs. So this is also run on buy side liquidity. So this is consistent with the ICT 2022 model. If you go down to a lower time frame, you can actually see as well that that institutional market structure. So we have accumulation in the euro, and the dollar seems to distribute above relative equal highs inside the new day opening gap. targets that liquidity. So I think that's all I want to discuss with today's video. And we talked about the first function of the balance price range, and we did some market commentary. If you learned anything, or if you found this information helpful, please give us a like and give us a subscribe. Until next time, God be with you. I'll see you later. Cheers, guys.